gents. How you doing?
Doing wonderful.
Good. Yeah. Here we are again.
We're coming up on a big week, even though Doug constantly says, "Hey, Dylan, you don't go to New York. You're a hillbilly from Virginia," and gives me crap on almost every episode about
I do say those
my
things.
lack of going to New York. And then guess what? Next week, I'm not going to be in InsurTech Insights, and I'm so sorry.
Right. So on brand, on Dylan brand.
It is on brand. Everything I do is on brand. So but exciting time. I've got one of my guys is still also attending InsurTech Insights.
Who's coming over?
Conference. Michael Yatka.
Great.
Oh, Yatsy. He reached out and told me that he was coming. I like him. He's a really nice guy.
Yeah.
Peter, you'll be in, right?
I'll be in. So Michael was in charge on one of our previous episodes. We spoke about a pizza tour, right? And Dylan suggested Michael lead that.
And just to be clear, I am going to New York tomorrow. So not so next week is InsurTech Insights. Tomorrow I will be there for the Reuters event, the Program Manager Conference.
Yes. Oh, okay. I'd be interested to hear how that goes. Yeah.
It's my first time going. So, Doug, this will be my 6th time going to New York this year so far. So I don't want to hear any crap from you anymore. But I'm sorry.
Yeah, we're not hanging out. We're not going to hang out, right?
Well, that's because you're not coming, not me.
I will be in New York tonight. I'm getting on a train in a little bit, heading to New York.
Then I'll see you tomorrow morning.
I wasn't invited to the event. Good friend Max Kane from Novella, though, Dylan, you should chat with him. I do want to get Max on the show at some point. They got some interesting things going on. I think Max is talking tomorrow at the event. So,
sounds great.
You guys
can't wait to meet him.
I believe another guest of the show will be there. The William Pitt, I think, is probably
William,
and I feel like William is actually, I think, is speaking with Joe Zuck, who also I'm going to go speak with. He's a great guy.
Nice.
So. Yeah,
lots of name dropping you guys are doing.
Well,
a lot of name dropping. Do you think maybe we can get to the end of this episode without
losing a potential
saying
sponsor?
Something bad? Well, losing a sponsor, but saying something bad about previous guests. And that, by the way, that's directed.
That's all you.
Me.
Yeah, exactly.
I just want to.
And you've never said anything bad about previous guests. You're just like, oh, this is the best episode we've ever done. And then,
right. But implicitly, that means everybody else was of a lower caliber.
More what's not said.
We're just not your intent. Thanks.
Yeah.
All right.
Maybe. I don't know.
Whoa.
Yeah.
No. They're all great people.
I don't know. Well, who should be our favorite guest? Should we start ranking episodes?
Ooh. That's after hours episode, I would say.
How about we let the people rank them?
Mm-hmm.
Right. So we'll send a survey to all 3 viewers, and they can determine who has the best episode.
We lost those viewers on the last show.
Last show was very popular statistically.
Really?
Very well.
It just came out yesterday, right?
Who was that?
We had the Karma. We had Jake on. Yeah, he's a great guy. Very interesting. Hey, we have Mr. InsurTech on today. I think that's what he calls himself.
Okay.
This is somebody that has been doing InsurTech, helping out with InsurTech, building community around InsurTech for what feels like 20 years. Started in InsurTech. I don't think it was in a word at the time that he started his company. Sold it to, I don't remember who. We'll ask him. We'll have the source on to tell us. Okay. And after that, he has built probably the premier community, especially in the US here, around all things InsurTech. So we have David Gritz joining us from InsurTech New York. He's going to come on and talk about all the things that they're working on, but specifically as it pertains to this show, their MGA Labs, which is a great program for early stage MGAs, maybe somebody who's just put their kind of first ideas together, got their deck together, thinking about the product. David's going to come on and talk about I think this is the 4th or 5th iteration. Dylan, I think both of us have been mentors in the past.
We've both been mentors. We've I know I've spoken at one of them about claims for the team because we had
Claims. Yeah.
No claims. So we've had we want to make sure, of course, that all the companies that are going through the MGA lab consider claims when they're doing this, making sure that they're auditing, even if it's their carrier who's providing claim service. So yeah, it's great. I also am really excited to talk to him just kind of about the whole ecosystem that he's created, because even the MGA lab is fantastic for MGAs, but also everything else that he has going on is really interesting potentially for MGAs as well. Everything from the community side to the VC side, there's a lot to talk about here.
Hey, can I just add him, Dylan? I know you really love to have everything. Well, I'll fix it like right in the middle of the episode. This is how good we're getting at this.
Let's do it.
But he's waiting. I see him. This guy has no time for anything else. We have him for an hour. That's a tight hour.
Most of it.
And we need to get him in. And we need to get him out. So I'm going to add him in. We'll fix his name.
Live from his helicopter. David Gritz.
It looks like he's in a helicopter. So let's bring him on. David, hey man,
good to see you guys.
Hey,
hello.
Thanks for waiting around while we get our pre-show recording done.
Nice. It's crazy. It's like already my second podcast of the day.
Oh wow!
How many do you do per day? Like 3 or 4?
No, I don't usually do many, but it just happened to be there was U.S. Prop Tech Council decided that they wanted to hear about insurance. So
okay,
and then you have Joe Rogan right after this, right?
Yeah, sure. Got to fit that one in.
Yeah,
big shout out to the U.S. Prop Tech Council. Very good. Yeah, we love a fellow podcast, don't we, in the space, which is brilliant to hear.
Absolutely.
We should take a listen to that podcast. I'm sure it's good. They maybe have a couple more listeners than we do. We're back up to 2, I think, with David, if we count David in. Hey, David, listen, we gave you a little. We gave the audience a little bit of background on you, and I know we want to get to the MGA labs, but I think it'd be interesting to hear a little bit about your background and how you got into building InsurTech New York. But you were founder. You sold to an insurance company. I was telling you guys, I can't remember the whole story. I know you've told me a few times, but I think that'd be interesting for everybody to hear, kind of like what got you into this space.
Sure. Yeah. So I'm happy to start from the beginning. So a friend of mine, Todd, was running a captive focus on workers' comp and commercial auto. So their captive is called Charter Partners. And at one point, they grew their captive to like 100 million in premium. They had, like 100 different industrial companies that were part of it. And, basically they had some repeated losses that were somewhat preventable. I don't want to say they're 100% preventable, but they were definitely preventable. But then they had similar losses in the next year, and they didn't learn from the previous year. So they got dropped by one of their reinsurers, which they made the mistake that many captives or MGAs do of being reliant on one reinsurer. And they were able to get a new one, but in the time being, like basically they lost like 85% of their premium. So it was a turnaround situation. So my friend Todd reached out and he's like, there's got to be a way that we can solve this problem with our captive, and maybe we can use technology. So I said, look, Todd, I don't know anything about insurance, but I know a ton about building technology. So why don't we work together? So we started InsurTech called Zero, and the idea is 0 lost days of work, because it's not just like a loss from a workers' comp claim perspective, but for the employer, right? They have only a limited number of people that can do certain jobs. And if the people are not able to work, especially if it's like a specialized skill in manufacturing, they're literally losing money every day. So that was really the goal, is to just like reduce lost days of work through what we called, or kind of by the industry called, behavioral based safety. So people taking into their mind actions and thoughts that will prevent them from being injured, because something like more than 70% of workplace injuries are preventable. So things like people getting hit by forklift trucks, or, one of the claims that happened for Charter Partners was someone getting up into a truck, instead of holding the handle, going one step at a time, just reaching up to the steering wheel, like, wreck their back, $250,000 claim later. So essentially, what we did was just like take some of the best practices in risk management and bring it all the way down to the line workers. And first we offered the product to all the members of the captive, and then from there we essentially offered it to the broader market. So like Bebron Medical was one of our early clients. They had factories, all over the country. We rolled it out in a few of them, and help prevent real injuries. So we grew that business and then sold it to one of our investors, Everest Re, and that was kind of my first full cycle. So really got an understanding of how a small insurance company works. I mean, captive is a little bit of a unique beast, but got that perspective, understood industrial risk. And then after that, I spent some time working with a group called the Silicon Valley Insurance Accelerator, so helping them run some of their events, do research for carriers. And then I was also in law school at the time, and I was doing this ridiculous travel where at the time I was either living in Pennsylvania or in New Jersey. And then, SVIA had events like almost every other week in the Bay Area. And then I was going to law school in Minnesota. So it was like this crazy triangle of travel. And I just thought like, and I tried to convince, the SVIA team, like Mike and Natalie, hey, why don't we do events in New York? Like, I'll run them all for you. And they're like, no, we're like SVIA. We don't do that. I was like, okay, whatever.
It's right in the name, David.
Exactly. So I met my business partner, Tony. We were originally trying to form a different business, which, because I had built the product for Zero, I was very familiar with product development. There were other startups I had in other industries before that. But we thought, why don't we just help seed stage startups with product development? That was our original thesis. Then we were like, well, why don't we run an event to get people interested? We later realized that actually building an InsurTech ecosystem in New York, which there wasn't one, was actually a better business than doing product development for seed stage startups. So we kind of pivoted like every other startup did and, created InsurTech New York.
Nice.
That's incredible. I don't think I realized that triangle of travel you were doing. That sounds challenging. Is the best way to put it.
The fortunate thing for law school is only 6 times a year. So it was like every other month in California, like we'll call it every 2 to 3 months in Minnesota, and then, whatever else I was just doing for natural networking. But it was pretty crazy.
David, I don't think I realized, maybe you've told me this before, so I apologize. I didn't know you were an attorney.
Yes, licensed in Pennsylvania. I almost took the New York bar, but this was during COVID and New York canceled or postponed first, and then Pennsylvania. So I was like already signed up for Pennsylvania, and I was like, whatever, I'll just take that one. I mean, Pennsylvania is like where the concept of the bar originated, because, the idea is like stepping past the bar in the courtroom. So, they had some of the first courtrooms in the US in Pennsylvania. So, I don't think it's really a terrible thing. And they have reciprocality with a lot of states.
Yeah.
Very good.
All right, man. Well, so you guys started InsurTech New York. You and your partner Tony, another great guy.
Yes.
And so for the last, because I remember my old MGA, we were in, I think maybe your first accelerator program, which was maybe
in our traditional accelerator,
2021, something like that.
2020. It was either 2020 or 2021. You might have been the second cohort.
Okay. And so at the time, you just had kind of like, I think it was 2 different accelerators. One was like more early stage, one was more growth stage. But I think shortly thereafter, you launched what's now become the MGA Labs, which is we're excited to hear more about, and definitely want to get people exposure to that and get them to apply. And I think you have your next kind of deadline coming up for cohort 5, is it?
So this will be cohort 4.
Core 4. Okay. Yeah. So tell us more just about the evolution into, the MGA labs and, then a little bit more about the program as well.
Sure. So I guess you're familiar with our traditional accelerator InsurTech Match, and we had been running that for a few years. And we are always very interested in what startups' feedback of the program was. And generally, the software-based startups gave us good feedback, but those that were MGAs, I would say that the primary feedback was it wasn't exactly tailored for them or it wasn't exactly complete. So, Tony and I talked and we said, what can we build that would actually solve the problem for an MGA, right? So MGAs ultimately have to build a robust business model, right? So figure out their actuarial side, their underwriting, policy forms, their claims strategy, what states they're going to be licensed in. Then they have to do the most daunting task of like convincing a reinsurer to back them and finding a front. And then, they need to find distribution. And if you think about it, whether it's like Y Combinator or it's, Techstars or Generator, like the more popular or well-known accelerator programs, none of those even speak the same language, right? Like they don't have reinsurers involved in it. Maybe they have like one, but the reinsurers aren't involved for business development purposes to find new program managers. And then the other challenge you have is that the entire infrastructure layer of an MGA is very different than a traditional software startup. Like a traditional software startup, like you just have to get like SOC 2 compliance and then, kind of, I'll say, force your way into your first enterprise account and then you're off to the races. But with an MGA, you have to meet the state regulatory licensing requirements. You have to, if you're an E&S, collect taxes. You have to make sure that you know how to issue a bordereau every month to the reinsurer and the fronting carrier. And if you don't do all these things, it's not just like a slap on the wrist. It's like, there's a chance that you could get serious fines from states like New York and California that are not super business friendly. Or, even in theory, if you're selling unlicensed insurance, that's like potential jail time. So when you talk to founders about the magnitude of overcoming those things, it's a very different challenge. And it's not just like, oh, you have to raise money and you're off to the races. So we decided to create a program that really addressed all of those issues and did it in two ways. One, structurally through education and networking. So opportunities to, learn about all of the core competencies that you need, ability to meet with reinsurers and fronting carriers in person. And then on the distribution side, right, meeting with agents and brokers, aggregators, and, national brokerages. And then probably the most important side is like finding good quality mentors. So every startup and every cohort gets 4 mentors: an actuary, an underwriter, a law firm to help with policy language, and what we call a program administrator. So someone who's run an MGA and ideally has scaled it to at least 20 million in premium. So they know that, like, we'll call it 0 to 20 kind of range and have that competency. But we have, even more sophisticated people that have really brought companies to scale. Like one of our mentors is Isaac Espinoza, who is, started Greenlight Re's innovation program, was the head of strategy at Root, and now is the CEO of Kettle. Or Derek, who's the co-founder of ClearCover. So, really talented mentors. And, a lot of it is somewhat bespoke. So in other words, if we find a startup that's joining the program, we're going to look for a mentor for them that's in their line of business. They're not going to just get like a generic mentor that happens to know a little bit about being an MGA. So if they're in financial lines, like we've had people as mentors that are like head of financial lines of Chubb. So that's kind of the level of focus and dedication that we have to each company.
Nice. You gave me an idea for an ad. I think I'm going to get it for tourists. Use tourists or go to jail on the licensing side.
Really, and he'll have a picture of you with a little word bubble beside it saying you could go to jail.
Yeah. David, that's so cool. I mean, just watching the evolution of of what you guys have put together has been really interesting, and I think the caliber of MGAs that have kind of graduated from the program. What do you guys? So I imagine part of what you're doing is going out to your mentor network, maybe going out to capacity that are already partners, and hearing from them kind of what they're looking for or what's needed. Is that part of the selection process? And if so, can you maybe talk about what's interesting, like what's on tap right now, what might maybe move an MGA idea up, and get acceptance to the program versus like there's nothing against even like I chat with Isaac about this, like they're it's still a homeowners and commercial property policy, but they're niche down for like catastrophic fire, but there's so many auto ideas and so many personal coverage ideas. That's probably not as interesting to some of your capacity right now, I imagine.
Yeah, so I'll answer that part of the question in terms of what the capacity providers are looking for second, but the first part is just the generic, theoretical things that we're looking for. So I would say the most important thing above anything else is it the right team that's able to execute on the idea, right? So not every team member has to have, written a big book of business in kind of the line or area or focus or class code that you're in. But, for example, if you want to do something in the e-commerce or like consumer products good space, you should have someone on your team that used to be an operator and had to buy insurance for a consumer product goods company. So there has to be, relevance and understanding of the customer base. So that's, team is, and, the stronger the team, obviously, the easier it is to make a decision. Second is, and I want to be clear with this, we don't expect this to be fully fleshed out, but we just expect it to be logical, which is the team needs to have a clear idea of how they want to distribute their product. So if you want to go with independent agents, that's fine, but demonstrate why independent agents will actually take a meeting with you and be interested in the product that you have. If it's just in the abstract, we're going to try independent agents and direct and embedded and all these things. That's not a plan. That's just a trial and error, hypothesis seeking type of approach. And that's not what we're looking for. We're looking for thoughtful founders that have a plan. And it's totally fine. Like, we know you're pre-seed or seed stage companies. Your plan's going to change, but we want to know that it's logical because it has to be defensible with the reinsurers. They're going to look at it, and if they don't believe you can get to at least 5 to 10 million in gross written premium in a short period of time, they're not going to want to back you. So it's more their requirement than ours. But I think it's, if you're trying to build a high growth business, it should be important to focus on distribution. And then the third piece is that basically you have to have some type of underwriting or data advantage, right? Why are you going to be underwriting better than a traditional carrier, like a Travelers or, an Arch Capital? What data set do you have? What analytics toolkit do you have? Or, what kind of proprietary underwriting technology do you have that's going to allow you to do that? So if you have those three things, it's like, an easy way for us to accept you into the program. If you have two of the three things, but we think we can help you fill in the third, then, I would say you have a shot. It doesn't mean it's kind of guaranteed. If you have one of those three things, I would say maybe come back to us next year, or, I'm happy to take a call with any founder and say, look, because we have probably about a month and a half left in the application window, so you might be able to figure that out over that month. And I'm happy to take a call and tell you, hey, these are the three things that you need to do to be like a serious candidate for the program.
That sounds great. Let's talk about that date. When is the cutoff date for the application? What is the process of the application? You kind of give us the prerequisites, which is fantastic. But I guess what is it that they actually need to do?
Sure. So application, is rolling. So we're, basically diligencing, accepting companies as they apply. So incentive to apply earlier. That being said, I think probably middle of July is about when we'll cut it off. So
Okay.
I would say try and get your application during the month of June. You'll have the best shot. But, if you have some things you need to fix ahead of time, like we're not opposed to getting applications before the window closes. And in terms of what's part of it, I mean, it's just like any other kind of application to a program. We're going to ask about to describe the problem that you're solving. We'll want a deck, any, carriers that you're already working with. Have you raised money? They're relatively straightforward questions. And, if you are already trying to get capacity now or building an MGA now, these are things that you should have like readily available. So, max, it should take like 30 minutes to fill out the application.
Sounds great. And then interview process, are you going to get on a call with them and talk it over, or is that it? It goes out to you and you're making a decision?
So basically the process has roughly 3 stages. So we do talk with, I would say every candidate that we're considering. Some of them I talk with even before that they apply, but yes, we definitely want to talk with you and get to know you, and make sure, the team is a right fit, and even becoming an MGA is a right fit. Like if we don't think you should become an MGA, we'll definitely let you know. So that's part of it, an interview. When you get to the second part of screening, some of those things I mentioned, like your distribution strategy, we're going to ask about. We might ask you like what types of projections do you have for premium growth. We'll want to know who's on your cap table. So not like heavy lift things, but things that would be logical for us to have a deeper understanding of you. So that's kind of the second phase. And then, internally on our end, we're taking these applications and sharing them with some of our trusted friends at reinsurers to see if there's appetite. So generally speaking, like we're not going to accept a company unless we feel like we have, a few reinsurers or distribution partners that could add value. It's not like a process where, we hope after you come in that, we think that capacity is available, where we try and verify that on the outset.
That's great.
David, sorry, Dylan, you go ahead.
I was just going to ask, what's required of the founder once they've actually been accepted into the program? Time commitments, equity commitments, anything else, financial commitments?
So basically time commitment. And this is one thing that's kind of maybe different than other programs. So we don't necessarily require the specific founder to be involved. So sometimes a company will have like a head of underwriting, a chief insurance officer, or even if you're a later stage company, like, you've hired a head of insurance just to go through this process. I mean, obviously our preference is to have the founders involved. In terms of specific time commitment, I would say, if you're already going through the process of becoming an MGA, it's all the things you would normally do. So there's no incremental additional time. But from a practical standpoint, I would say you should be meeting with at least 1 or 2 of your mentors every week. So, 2 hours a week. And then there's 3 days in person. We have our education day, which is focused on building your model, which I think both Doug and Dylan have spoken at before. Then we have our capacity day, which is also part of the infrastructure component. So I think Laura's been a part of that. And then we have distribution day, where you get to meet with the agents and brokers. So 3 days in person, 1 to 2 hours a week meeting with the mentors, and then the work that you're already going to be doing to become an MGA. So that would be time commitment. And then equity commitment. The cost of the program is $100,000 in equity at your current valuation. And I would say we're relatively generous. So if you haven't raised a round yet, we'll kind of project what your valuation should be. We're not trying to be like, like GIA or Y Combinator and taking 6%. Most of the companies are giving up between like 0.5% and a max of like 2%. And, this is not like a one-time thing. It's not like you participate for 3 months and then like we'll never answer the phone again. We're trying to build a long-term partnership. So, we have a captive that we're launching ourselves. So we might be interested in reinsuring you in the future. And, one of our graduates, we're working on that now. And we'll continue to help you for the entire life cycle of your company.
That's fantastic.
One thing, David, you mentioned many interesting things, but one thing to pick up on, which is an interesting question for a lot of our viewers who are thinking about launching an MGA or whether the time's right or not. So you mentioned when you speak to the people who first come to you, one of the initial assessments is an MGA the right path for you as a business or not? What would you say makes an MGA the right path versus perhaps being a service provider or some other aspect in the industry?
So there's two pieces of that. One is based off of the vision of the founders. So we've had a couple of companies have gone through the MGA lab and they've ultimately decided not to become an MGA. And, we're totally fine with that, but maybe sharing those examples would be, helpful or instructive. So one example is a company called Linksight. They are an Israeli-based tech company that focuses on swimming pool safety. So they have a machine vision technology and a wearable for lifeguards to determine if someone is either at risk of drowning or drowning. So if you're a lifeguard watching more than one swimming pool, they can alert you to drowning risk. And, you could naturally see how that would be a pretty great thing. And they were looking to offer a general liability product that could either replace the facility's existing general liability. So think, a hotel, YMCA or swimming club, or even, a gym like an LA Fitness that has that. Or they were also thinking about like an excess liability cover, because the worst thing is you have a drowning. I mean, this sounds pretty morbid, but you have a drowning and the person doesn't die, but they get brain damage. This is like a, $3 to $4 million claim. So ultimately, there was a link between the loss control and the product, but why they decided not to become an MGA is because they met a lot of carriers in the program, and the carriers were like, hey, can we just use this as loss control and just license this from you? And they had one team member who was kind of their head of insurance, who was based in North Carolina. The rest of the team was in Israel. And, he was kind of focused also on US market expansion, not just the MGA component. So he was just distracted by growing the software side of the business, and it was going really well. So out of the program, they definitely got clients and they got business value, but they ultimately decided they're better to just stay as a software company. Yeah. Another example is a company in Canada called Boardwalk, and they are a digital broker based in Toronto, focusing like the lower middle market and middle market. A lot of their clients are in construction. They started to build part of their book in the retail and hospitality space, and they wanted to create a product around basically like, small restaurants and hotels, or just in general, like Main Street retail, because it's one of the areas where, it's underserved part of the space, especially in Canada. And there was at least like 3 or 4 reinsurers that wanted to work with them. They were ready to go. And, no other thing that I would say is just like, they wanted to double down and build their book of business with their brokerage. So they said, why don't we do this and like come back to it later? So, they have those relationships. They can always go back to it. But for them, they just decided like growing the brokerage model made more sense at the end of the program.
They sound like really interesting case studies. We'll put links to both Linksight and Boardwalk in the show notes for people to check them out and find out more. Little side note on that for Dylan. My university job was as a lifeguard, and no one drowned, so 100% record, I would say. Yeah.
Nice.
well done.
Yeah, thank you.
It was a kiddie pool. It was only a foot. It was like a little splash pad. No one could actually drown.
I'm not sure if it's 100% record or a 0% record, but
Peter, but if somebody drowns, is it like instant firing, or do you get like a PIP, like a performance review?
You have to get a warning first, right? Surely.
Yeah. Yeah. I know you're a cricket guy, but like 3 strikes, right? So yeah. 2 done. Reminds me not to let you watch my kids, Peter, even though you're a brand new dad. You're learning. You're still figuring it out. So, David, you had mentioned earlier maybe some thoughts around what your capacity or what your partners are interested in. I'd definitely be curious to hear more about that.
Yeah, definitely. So I would say couple themes, and we can dig into any of them. So E&S versus the admitted, definitely more interested in the E&S side of things. In terms of, commercial versus personal lines, more on the commercial versus personal lines, with the exception of like warranty or personal artifact or things that would be considered inland marine, there's definitely a heavy interest in inland marine. And then, within the commercial side, there's a lot of interest in small business, in professional liability, in which, technically this would be financial lines, but, D&O or management liability, those areas are all, I would say, areas of a high level of interest. But basically, if you can find a specialty area of commercial with less than a 50% loss ratio and relatively low severity, so limits under 2 million, those are like golden areas. All the reinsurers have, significant interest. That being said, if you have a more generic area, like you want to start a workers' comp MGA, what's important is being niched down. So you can't just be like, I'm going to do the entire class code of construction and, we're going to be in good shape, because like no one wants you to do like, we'll call it high voltage electricians, right? I mean, there are some MGAs that are doing that, like, InsurTech is like, founder has experience with like, doing bomb disposal, so he's not afraid of any of this stuff.
Is that Joe?
Yeah, Joe. So
yeah.
I mean, he managed to get capacity, but I think he's more of an anomaly. So if you're coming to us with like, high risk workers comp, yes, we do know a couple insurers that are willing to do it, but it's not going to be very easy. Versus if you're like, I realize that people in, software, accounting, and law almost have like no instances of workers comp, so we're going to focus there. Then that's definitely going to be a lot easier.
Yeah. What about, is anybody working on podcast liability and reputational harm? Because we might have a
Dylan needs a policy for that, I think. After last week.
Me.
No, to protect Dylan, both of you might want to just have me as the named insured.
Yeah, I don't know. I mean, we haven't run across any startups that are specifically in media liability. I think it's definitely an opportunistic area. In our first traditional accelerator or second cohort, it might have been your cohort. I don't know if you remember Raphael from Notch, but they had an idea of creating a product that was more of a cyber product for influencers. So one of the challenges is like, if you're relying on your Instagram, it gets hacked and you can't get access. It's not like you can just like, call up Meta and say, I'm a really important influencer, fix it. Like you have to go through the same shitty process as everybody else. So pretty much their idea was they could connect into your account. So if they know it's been breached, they can prevent like the person from intruding on it, or like notify the social media platform sooner. So that was kind of their approach, but they weren't necessarily, focused on the media liability side. It's more like the cyber theft or ransom side. But, I don't think it's necessarily a bad area. I mean, given all the craziness that's happening between the current kind of political landscape and the media agencies, it could be a good space.
Yeah, just not us as a first policyholder, I guess.
I risk.
Dylan, you sent me a bunch of like really rude messages on LinkedIn, and then you told me that you got hacked. And maybe you need this notch policy.
That was
really mean.
That was the old me before therapy.
Yeah,
sorry about that.
I haven't been called to those words in a long time. David, I'd love to chat a little bit here about your thought, because I know you guys have your investment fund, and I think that's not exclusive to MGAs.
No, it's not exclusive to MGAs.
We talk a lot about on the show, like I think how overvalued some MGAs have become or had become, right, in the past, and not because of them. I think there's a lot of outside non-smart money kind of coming into the space, and that may have caused some issues for some MGAs, and even just like overhang. I think there's investors who should be investing in MGAs but aren't because of some of the overhang. Curious on like your thoughts around valuation and like how, like what type of investors should some of these MGAs be looking for? If they're most are not going to be $1 billion businesses, right? These, especially if you're niche down, So how are you guys thinking about that, and maybe trying to bring some money in to help out?
Yeah, no, definitely. So like about 50% of our fund portfolio is either digital brokers or MGAs. So it's, example of, so to speak, eating our own dog food that, if we're going to help form these MGAs, we want to invest in them. And, as we grow our AUM, we'll definitely continue to invest more into the space. And I would say we definitely are either, if you want to call it counter cyclical or contrarian. A lot of the investors have pulled out of the space, but if you're looking for like the best ones, so kind of in order, first would be the reinsurers that have venture groups, right? So Greenlight Re, Munich Re Ventures, Score, Convex has a venture group now. So those are all good ones, right? Because there's a strategic alignment, right? And many of them can fund you across multiple different stages. Then, the second tier below that would be essentially like, traditional VCs like us, but those that actually, have some MGAs in their portfolio. So like American Family Ventures would be, one example. Sandalphon Capital, they invested in the seed round of Kin. Sure Ventures, Gopi's investor in one of our MGA lab companies for sure, which is a pet insurer. I would basically just kind of look at their portfolio. If they have 2 or 3 MGAs, it's always like, a good thing. It's less of an uphill battle. And then kind of third tier would be generalist fintech investors. So I think if you explain to them that an MGA is very much similar to like a digital mortgage company or a digital lender, in the sense they're using somebody else's balance sheet, but they're originating business, that analogy tends to work, really well. I would say worst ones to go to are like, basically total generalists that have no connection to fintech and have no investment in MGA. So if you look at like the largest, because we did some research on this, the largest VCs by AUM, so like the Andreessens and Sequoias of the world, only 1% of their portfolio, roughly, I mean, it was like between 0.7 and 1.5% of their portfolio is InsurTech. So, do you want to be fighting for the opportunity to be that 1% and have to persuade them when they've made some mistakes, like maybe invested in hippos like Series E or Series F? Or would you rather focus on someone who's had like good experiences, right? So that would be like generally my rules of thumb for investors. But we're trying to do everything we can to expand the aperture. So like every time I talk to other investors, like to the extent that, we can spread the gospel of the benefit of MGAs, then, we'll definitely do that. And at least from my perspective, I think it's easier for an MGA to grow like once you have capacity than a software company. Because if you think about it, most of the time, like the agents and brokers already have the customers. You just have to reach them and offer your product to them. So you're persuading one distributor that might have a ton of clients versus like, trying to sell an enterprise customer like a carrier could take 1.5 years, and that's one at a time.
Yeah.
I laugh slightly because 1.5 years is probably pretty ambitious.
That's true. Depends. Yeah.
So David, real quick, our last guest, the episode that just dropped yesterday, was Jacob Landman from Karma Cannabis. And he went a different direction. He went with the family office direction. And I think based on that conversation, I don't think we dug in this too much, but I believe that family office was also investing in cannabis, in general, not just insurance for cannabis. And so you get, I think that's maybe really one of the best spots for MGAs right now to look for investment. I think it's something that I would love to have more insight on. Do you have any involvement with family offices, high net worth individuals investing in MGAs that you're aware of? What does that look like to find them, if you have any
Yeah, so I would say this is still like a learning process for us, because like for our fund, we also talk with family offices. And what I would say is, if there's an alignment between what your product is and the family office. So family offices tend to invest in a lot of real estate. So if your line of business touches on property, like, there's a logical connection there. If anything, they might end up like being a client. So I would say it's definitely an avenue to go, but I wouldn't necessarily recommend it for founders as a primary, because in general, family offices are not super accessible. It's not like you can just like look up a family office, email them, and they'll magically respond to a cold email. There are some that do, right? So like we're part of this like deal flow sharing group with LIGO Partners, which is like an association of family offices. And, I think Beam was one of the deals they did, Beam Dental. So I think if you can get into a conversation with them, you could definitely persuade them. That being said, it's difficult to get the first conversation. So if you have access, go for it. If you don't have access, it could be, wasted time.
Yeah. David, talk to me about one thing that I think a lot of aspiring MGAs and early stage MGAs will be thinking about. What's the exit landscape at the moment for MGAs? I mean, it seems from the outside really positive, right? There's lots of acquisition happening in the space. There's lots of interest. What does the reality of that in terms of metrics, in terms of numbers, in terms of valuation figures that you're seeing?
Yeah, so I would say exit landscape is great, with a caveat, right? Which is basically the two things that you need to be an exit candidate. Number one is break even or slight EBITDA. And number two is, threshold of scalability, right? So I think once you start hitting 25 million or 50 million in gross written premium, the universe of interested parties opens up a lot, because you have the large brokers, like the Gallaghers, the Amwins of the world. You have private equity, and you even have carriers. But at that subscale, we'll call it like less than 25 million in premium, like between, we'll call it 5 and 25. You're really looking at more of like an acqui-hire type of thing. So this could be like a Mission Underwriters, Balanced Partners, Euclid Specialty. And, you could still have a good outcome, but from a founder's perspective, it might be more like a stock type of transaction or a hybrid where, I mean, you might get a decent outcome depending on how much investors own the company, but you're not going to get the type of multiples like, if you look at Corvus, it got like 2 times book. You're probably not going to get that. And, that being said, there's a startup we know that is in the process of selling their like 1 million in GWP book of business, and they're likely going to get somewhere in the order of like 4 to even 7 times book. But their loss ratio is 5%. So everything has like a context, right? Like anyone wants to get, that's like printing money if you can have, I mean, a 5%.
How long are they
loss
open?
ratio.
How long?
How long have they been running?
I just need to know how long that 5% loss ratio has been established.
3 years. 3 years.
Okay. All right.
Yeah.
David, we know a company
this
that
again.
has a 2% loss ratio, and I feel like we should make an intro because these guys are killing it.
Nice.
This is where we need that insurance that Doug was asking for.
They're never coming on. They hate us. They're not going to come on.
Anyway, all right. So
I'll still make the intro for David because it sounds like they might have a buyer.
So yeah, that's incredible to have.
I mean, that company has
depending
like
on the tail that you've
10 carriers that they're talking with that might want to acquire them. So
that's awesome.
What so in kind of like the niche down books of business where there is a top, right? Is because I compare that to maybe a software company where if you're in a very niche area and there's just like no way for you to expand beyond, I mean, let's say you're doing like something very esoteric for the insurance space and there's like 5 carriers that would actually buy your product. You're not getting an investment, right? Because you're not going to find a way out of that without dramatic changes to your product. Whereas I think in the distribution, the MGA space, like you might be relevant for some other purpose that they, an Amwins or a CRC or a Mission or whomever has. Are you like, do you guys think about that when or are you helping advise MGAs to that? Like this, even though you might not get past 100 million in gross written premium with this market that you have, and to do that, you have to own like half the market. This still makes sense for you to do because it might be, net positive for a larger group. Like, does that ever?
Yeah, no.
ever come into
So
play?
I guess one thing that's worth noting about the MGA lab is you don't have to be a venture-backed company or even venture-backable. So if you want to start a lifestyle MGA, but we think it's a worthwhile one for the program, we're fine with that. I mean, there has to be some minimum amount of scale, right? Like if you could only hit like 25 million in gross written premium as a maximum potential, that's probably a little bit too small. But if you have at least 50 million to 100 million gross written premium potential, it's totally fine for us.
Love that.
So David, people can reach out to you on LinkedIn. We'll in the show notes, we'll put the application link for MGA Labs. I think by the time this episode goes live, there'll be around a month or so for applications to take place. Peter, I know you love kind of ending on our legacy question, which, by the way, this week, Peter, or next week when you're in New York, we are going to go to 7th and 37th, where there's a restaurant called Legacy, but like SEA.
Ooh.
And I want us to get a picture in front of it.
I
and then
thought we were
start
going to
posting it.
buy me a seafood dinner or something.
Well,
Okay.
I'll buy you dinner there as well.
Okay.
I don't know if it's a great venue, but every time I walk by there, I think of you asking the Legacy.
Very good. Well, yes, David, as Doug alludes to, we'd love to know. Obviously, you've built a huge community here. I even enjoy. I can't see all of the text because my eyesight's not great on your whiteboard, but I see you're constantly reaching out to people and got these tasks to enhance this community more and more every day. But what's your legacy for all of this that you're building of for InsurTech New York? And you mentioned a captive. You mentioned having a role in all of these different MGAs that are kind of starting off with you. So how do you see your career?
Yeah, so I mean, I'll answer first with MGA Lab because that's kind of the purpose of this core conversation, and then me personally beyond that. So on the MGA Lab perspective, right? So Conning Research has come out with a bunch of reports about MGAs, and they roughly say that there's about 1,200 MGAs that are active at one given time. So if you think about, every year we're incubating 10 to 12, MGAs over a decade, it means like 10% of the MGA universe has gone through our program. So the best way I would say of what the MGA Lab is trying to do is it's trying to make like, I think this is like Steve Jobs saying is like our little dent in the universe. So, to the extent that we could meaningfully impact the world of MGAs by creating new or supporting the generation of new and useful, products, I think, we're creating like a more insurable or stable world. And, that probably leads to like more, my why about why I run the business and kind of what our long-term vision is. But, through each of the things that we do with our company, so it's our events, like the connections we make, our traditional accelerator helping with technology companies, the MGA Lab, and some of the other new activities like the captive that we're setting up, all those things basically help create a bridge, right? So if you think about the world today, it's becoming more volatile, right? So there's more wars happening than there were like a decade ago. Climate is more unstable. Financial markets are crazier. I mean, if you just look at the peak to trough time for our most recent kind of market changes, or some of the dynamics that are destabilizing, like 0-day options, or even the impact that cyber could have, like a major cyber incident on financial markets, like all those things are up in the air. But what's not is the ability for us as an industry and, humans collectively to actually create, we'll call it technology, but it's really like products that protect people against that volatility, right? So even things as remote as like a volcano happening in the Pacific Northwest, there's people that probably could come up with a product that could insure against that. And is it guaranteed to happen? Absolutely. But like it might be on a 500-year time horizon. But because we have the tools that we created in insurance and, hopefully us accelerating them, we can have a more stable world. So like my kind of why or legacy is like people look back and said like, wow, like David really helped the world to become like, incrementally more stable by supporting the creation of new products and technologies that reduce the volatility of the world or buffer against that volatility.
I love it.
I like that. David, thanks so much for coming on. Oh, hey, real quick, have you done any push-ups today?
Yesterday I did it. It was helpful. I also added a plank into it. So
nice.
It's
wait, where did that come
I haven't
from?
quite hit
Listen, Dylan, clearly people come to me for personal training advice based on my physique. And David just reached out and wanted to say, how do you do that? And I let him know. I just
on that overdose of creatine that Doug had a few weeks ago.
Oh my God, it was yeah. Thanks for helping me get my dosage right, Peter. No, hey, so David, we'll see you next week, right? You'll be around Insights.
Yeah, Tuesday through Thursday evening. So
we want to get you on at some point. And again, we should get this podcast liability coverage in place before we do this. But we want to do this concept where we invite guests or just friends of the show on, and we'll chat a little bit about insurance, but it's more just getting some buddies together and having a nice chat and putting that out there, seeing how it goes. Dylan's so keyed in for this, he can't wait. So we're not going to do one this time, but we'll try and get one together. Actually, we have enough people in Philly now where we should just go down. Maybe we'll do one over some cheesesteaks. And a
sounds
couple
great.
Of,
yeah.
What's the local beer? Keystone something, or what beer do people like in Pennsylvania? It's like specific. Yingling, right? Yingling.
Yingling's definitely one of them. Yeah. Actually, there's a small possibility if we plan far enough in advance, we might be able to get a factory tour. I know one of my past undergrad professors did like, a number of consulting projects for them. So I think they're in like the Pottstown kind of area. So, north of Philly. But if that's of interest, I can see if it's within the realm of possibility.
Look at this.
To do a show with brewing equipment behind us, I love it. That's a huge pivot, but let's go for it.
Cool. Hey, David, thanks so much for coming on, man. We'll see you next week, and appreciate you telling us more about the labs.
Sounds good. Always fun to talk MGAs.
All right.
Thanks, David. Thanks a lot.
Hey, the number of field trips we have, we're going to South Africa, we're going to Claims Disneyland. Now we got the Yingling Tour Factory, all because we do this little show here.
That's why we do it. That's why we do it.
Yeah, free stuff. Dylan, I saw you taking a lot of notes. You thinking about maybe submitting an MGA?
No, but there's some really interesting things there. The product ideas that were popping in my head when he's talking. I will say that the family office, looking at associations related to them and finding a way to get someone on the show to have those conversations to kind of introduce the world of family offices to MGAs. That would be fantastic. I was taking some notes. Apologize for that. I just want to make sure that we keep getting fantastic guests here, and the ideas just flow when I'm talking to David. He's got great information, and it's these are things that I want to be able to follow up on.
You could just walk up and down Central Park, maybe the townhouses there, and just
knock on the door.
People to come out and ask them if they want to invest. That's a good idea.
That sounds like a great idea.
Yeah,
we
maybe
can
should
make
do
that.
that tomorrow.
We can do that as a segment and just knock knock. And no, I don't.
Oh, an investor walking tour right after our pizza walking tour.
Yeah.
They'll be
Just to cost
incorporated.
rich
Same
people for
thing.
money. Yeah,
Yeah.
I like this idea.
Sounds good.
David can have that. Maybe that can be part of their investment strategy.
I like it. I like it.
I just need to find out where this legacy is. I'm tempted to make a reservation.
It's right in the Moxie in the Garment District, Peter. We're gonna get a picture there. I think I see it every time I'm in the city. It's pretty close to where we work out of, and I think of you.
And Doug stays at Moxie hotels regularly, so that's his. It's his go-to spot.
It's a nice small room. I like a tight bed.
Is there one in Columbus? Are you going to stay at the Moxie in Columbus? Is there one?
I don't know if there's one. I usually stay at the one in like Times Square, close to us. Now I'm gonna have all these people trying to break into my room.
We might have to do an impromptu end to this show because I've got someone ringing at my doorbell. So,
Peter, I had a lot of questions. All right, Peter, we'll see you next week. Dylan, hopefully we can catch up tomorrow. Hey, if you're an MGA and you haven't applied to the MGA labs yet, do it right now. Like literally right now.
Don't wait.
Do it.
Great.
what are you waiting for? Yep.
All right.
Thanks.
All right.
Okay.
See you
Bye.
guys.
Bye.
Bye.